Good morning. Welcome to our update for the third quarter. We've had another good period. We're making real progress across the business and our markets remain strong. What stands out for me is the strength of our leasing performance, the benefits of our customer focus in retail, and the progress we're making on developments. Starting with leasing, in offices, we've let or put under offer over 280,000 square feet of space. Leadenhall has been a star performer with nearly 100,000 square feet of activity. It's now around 70% let or under offer. That compares to 58% just 4 months ago. And we've got further discussions ongoing. We're attracting a broad group of occupiers. The building's architects, Rogers, Stirk and Harbour, have taken space recently. And we're also under offer to a tech company, a financial services business, and another insurance operator. What I'm really pleased about is the rents we're achieving at Leadenhall. Our strategy of letting the lower floors early and focusing on the upper floors post-completion is paying off. We're seeing rents on the upper floors some 20% above 4 years ago, and we've recently achieved a record rent for the city of over £80 a square foot. In retail, leasing has been encouraging. Deals were nearly 11% ahead of ERV, benefiting in part from subdividing units. Christmas trading was stronger than expected across the market, although challenges remain in the food sector. What's clear is just how much online and physical strategies are converging, and just how important getting this right is. Click and collect is a growing and economically important part of retailers' offer. It's a trend which plays well to our portfolio. Our footfall has continued to outperform the benchmarks, and our retailer same-store sales are ahead by 4.4%. We've continued to take advantage of strong investment markets to make selective sales. Of the 370 million of sales since the beginning of the quarter, we've sold 220 million of retail assets. This includes £55 million of superstores. So, year to date, we've now sold over £900 million of assets. Together, these account for over 30 million of annual net rent. Acquisition spend has been relatively modest, with most of our reinvestment and capital commitments focused on upgrades to our existing assets and on developments. We feel good about the market and about our development programme. We're pressing ahead with near-term projects, and we're working on detailed planning for our medium-term pipeline. Our vision for the future of Broadgate is really starting to take shape. The occupier mix is changing in this part of the city, and we're working hard to capture it. 199 Bishopsgate is now full, with the remaining 62,000 square feet let to WeWork, the co-working office provider. Broadgate Circle will be launched in April. It's virtually full, with a new restaurant offering, including the Michelin-starred Yoacha. At 5 Broadgate, we've handed over the trading floors to UBS, with the remaining floors practically completing by June. We've also submitted planning on 100 Liverpool Street and at nearby Blossom Street. Together, these total nearly 900,000 square feet of new office, retail and residential space in a part of London which is being transformed. In the West End at Clarges, we sold several more of the residential apartments. This brings the total sold to £260 million. We're not intending to make any more sales for a while. We're also on track at 4 Kingdom Street, Paddington, for a new office building. We expect to be on site next month. At Regent's Place, we'll take back space at 338 Euston Road for refurbishment in May. In retail, we've reached practical completion on 3 major extensions. You'll remember at the full year, I said we'd focus on 4 key things. You can see we've made good progress against our priorities. Driving rental growth, including letting up completed developments. Moving forward with our new development pipeline, taking advantage of strong investment demand to sell mature retail assets, and selectively making acquisitions. As we look to the balance of the year, we continue to feel positive. In retail, the improving economy and falling oil price appears to be putting more money in people's pockets. In London, the investment market continues to benefit from overseas as well as domestic capital. And with a positive macro outlook, occupational demand looks set to remain firm. Of course, the situation in Europe is difficult to call, and there may be some uncertainty around the election here. But ultimately, the fundamentals are sound. So overall, I think we're in a good place. Thank you.